A trillion-dollar empire just lost more value in a single week than General Motors, Ford, and Stellantis are worth, combined. The man behind it is the richest person alive. And the reason his company is bleeding? A public, brutal falling out with the most powerful man in the world. In February 2025, Donald Trump stood beside a white sedan in the White House driveway, praising Elon Musk's vision for American energy. Musk soon took on a formal role, co-leading the Department of Government Efficiency, serving as a special government employee for 114 days. But his departure from that post on April 30th came just weeks before the alliance fractured into a public, high-stakes feud. Yet the empire's financial foundation was already exposed to risks far outside Washington, rooted in a decision from 2019. That year, Tesla opened a wholly foreign-owned Gigafactory in Shanghai, the first of its kind for any overseas automaker in China. While the plant drastically cut assembly and logistics costs, it also fueled a large-scale transfer of industrial intelligence. Chinese competitors like Geely, Zeekr, Xiaomi, and eventual global volume leader BYD quickly learned from Tesla's advanced manufacturing methods. They used this technology to build their own low-cost electric vehicles, steadily eroding Tesla's market share in China and turning Musk's greatest production asset into his most dangerous liability. In January 2025, Tesla's domestic stronghold began to crack. Sales in California, historically the company's most reliable American market, fell 31% year over year. In Europe, the contraction was even steeper, with deliveries plunging 43% across January and February combined. While a refreshed Model Y provided a temporary sales lift in Spain, Norway, and Portugal, demand in France, Italy, Sweden, and Denmark fell for 6 consecutive months. In these shrinking markets, Volkswagen, BMW, and BYD steadily captured market share. In China, the downward trend accelerated. Sales fell 29% over the first 2 months of 2025, compared to the same period in 2024. Tesla's share of the Chinese electric vehicle market, which stood at 15% in 2020, fell to 10% in 2024, and slumped to just 6% during the first 5 months of 2025. These regional losses quickly hit the balance sheet. In the first quarter of 2025, Tesla's total revenue fell to $19.3 billion, down from $21.3 billion the year before. Core automotive revenue took the hardest hit, dropping 20% from $17.4 billion to $14 billion. This commercial decline coincided with a historic competitive milestone. BYD officially overtook Tesla in total annual revenue last year, bringing in approximately $107 billion, compared to Tesla's $98 billion. Long before the political battle lines were drawn in Washington, the financial data showed a company entering the fight from a position of mounting operational weakness. In January 2025, the U.S. Department of Defense blacklisted Tesla's primary battery supplier, CATL, over alleged ties to the Chinese military, complicating the Shanghai plant's supply chain. By April, a 25% federal tariff on imported steel, aluminum, and batteries drove manufacturing costs higher. Squeezed by rising costs, Tesla also faced a sudden wave of political backlash. Musk's co-leadership of the Department of Government Efficiency alienated Democratic voters in California, historically the company's strongest market. Boycotts quickly turned hostile as activists organized protests, leaving Tesla vehicles vandalized and set on fire. These escalating expenses and active boycotts turned a simple drop in demand into a severe operational bottleneck. In June 2025, the legislative centerpiece of the second Trump administration, the One Big Beautiful Bill, passed the Senate along strict party lines. This sweeping tax and spending package extended the 2017 tax cuts, but it also slashed healthcare, social, and environmental spending, while heavily boosting military and immigration enforcement budgets. In the House, the bill faced immediate, intense resistance from Democrats and some fiscally conservative Republicans. Elon Musk quickly joined the opposition. Armed with independent estimates showing the legislation would add $3 trillion to the national debt, Musk launched a public campaign on X. This $3 trillion projection sat on top of an existing national debt that already exceeded $36.5 trillion. Musk did not limit his attacks to fiscal spreadsheets. He threatened to back primary challengers against any lawmaker who voted for the bill, actively targeting members of his own political circle. On June 5, 2025, the political dispute translated into immediate financial fallout. In a single trading session, Tesla stock plunged 14%. This single-day sell-off wiped out roughly $152 billion in market value, a loss larger than the combined valuation of General Motors, Ford, and Stellantis. The rapid decline broke through investor support, pushing Tesla's total market capitalization below the symbolic $1 trillion threshold. As the sell-off deepened, the limits of Tesla's corporate structure became glaringly clear. Despite a prior Securities and Exchange Commission settlement requiring pre-approval for market-moving statements, the board of directors possessed virtually no leverage to restrain Musk's public attacks or online behavior. For institutional investors, the day's losses exposed a fundamental risk. Tesla's valuation was bound to a chief executive who operated entirely outside the control of his own board, leaving the company's market standing vulnerable to his personal political battles. Tesla's valuation defies traditional automotive metrics. In mid-2025, even as vehicle margins compressed, the company commanded a market capitalization that eclipsed its largest global competitors combined. This premium persists because the market does not evaluate the company as a legacy manufacturer. Instead, investors price the business as an artificial intelligence platform. The valuation relies on speculative horizons, the deployment of autonomous driving software, the scaling of humanoid robotics, and a proprietary neural network infrastructure. Wall Street is betting on technological breakthroughs scheduled years in the future, rather than current delivery volumes. For supporters, this forward-looking premium reflects an unmatched technological pipeline. For critics, it remains a speculative bubble tied to promises that have yet to meet operating reality. The financial fallout of the June sell-off exposed deeper structural risks that went far beyond a single day's trading. As president, Trump held administrative levers that could directly affect Tesla's operations. He could pressure the National Highway Traffic Safety Administration to intensify its federal probes into Tesla's full self-driving software, or urge the Securities and Exchange Commission to scrutinize Musk's public communications. Musk's unfiltered posts on X already ran afoul of a prior SEC settlement requiring pre-approval for market-moving statements. With Trump historically unwilling to overlook public defiance, institutional investors grew increasingly concerned about the chief executive's divided attention. Some shareholders began pushing Tesla's board to enforce strict oversight, demanding a formal commitment that Musk devote 40 hours a week solely to the automaker, free from outside political distractions. Vehicle sales still make up around 90% of Tesla's revenue. Yet, as market analyst Matthew Winkler noted, Tesla's overall valuation still exceeds the combined value of the world's 10 largest traditional automakers, supported by nearly $100 billion in annual revenue. Expanding into robotics brings the company into direct competition with Honda and Boston Dynamics, while its autonomous driving ambitions face a formidable self-driving rival in Alphabet's Waymo. Tesla now faces a narrow set of future scenarios. A reconciliation with Trump appears unlikely if Musk continues to oppose the tax bill, unless the legislation fails in the House. Without a political truce, the company remains exposed to escalating regulatory pressure, investor intervention, or a continued erosion of its global market share. As political alliances fracture, the boundary between corporate value and personal power dissolves. Is Tesla still being valued as a car company, a future tech platform, or a high-risk proxy for Musk's political and personal power? And what happens if the balance between those narratives finally breaks?